Well, Growthpoint will acquire the entire Tiber Group portfolio of properties and management business, that for 6.6 billion rand. Now, the deal includes 320,000 square meters of office space here in Sandton, where the CNBC studios are. The portfolio consists of multinational head offices such as Nestle, PPC, AngloGold Ashanti, Norton Rhodes, Merrill Lynch, Barclays and Absa Capital, to name but a few. Joining us now for more on this acquisition, Norbert Sass, the CEO of Growthpoint. Norbert, thanks for joining us today. So you talk about this being a once-in-a-lifetime opportunity. Why do you describe it like that?
I think if you look at the quality of this underlying portfolio and the fact that it's been put together, if you want, over the last 10, 15, maybe even 20 years, there are not that many opportunities out there of size and scale such as this at 6.6 odd billion rand, and with the underlying quality of what's there. You know, these properties are all what we in the property industry call P grade, which is real investment grade type properties, and A grade, very high quality. As you mentioned there, a very long list of distinguished tenants who occupy the space on long leases. Mm-hmm. So that kind of opportunity doesn't come around often. Why
is Tiber selling if it's such great property?
You have to understand the history, I guess, about the Tiber Group. As I said, it's probably the foremost private developer of investment grade properties over the last 20 years. And unfortunately, one of the founders, Francesco Rivera, passed away about 2.5 years ago. So mainly family shareholders who are not particularly active in the day-to-day business, looking for a liquidity event. I think Tiber explored a number of options for this liquidity event, and I think at the end of the day chose Growthpoint as its partner in a way going forward, as well as providing this liquidity event for the outgoing shareholders or the shareholders that are cashing in.
Mm-hmm. So you essentially have got 48,000 square meters of undeveloped bulk land that you also can use here in the Sandton precinct, essentially for future growth plans. I mean, what do those entail? What do you envision to do? What do you envision doing with that land?
Correct. So in addition to the existing portfolio, or we call it the income producing portfolio of about 320,000 square meters, there's potential to develop a further 48,000 square meters. And the beauty of this transaction is the partnership, if you want, that we have with the management of Tiber Projects, which was the entity that was responsible for developing this portfolio over an extended period of time. Part of the deal is that we're also taking on 55 employees of Tiber, of Tiber Projects.
I mean, that extends your kind of team quite a bit, 55 people.
Correct. We're about 460, 470 people at the moment. Mm-hmm. We're adding, that's just more than 10% of our total staff complement. But the beauty of this is that we retain the key relationships with tenants. We retain the knowledge and the corporate memory of these buildings, and that's very, very important when you own these properties long term. And we've secured ongoing expertise of the three executive guys who ran Tiber Projects for many, many years, as well as their strategic relationship with the construction company, Tiber Construction.
So essentially, when it comes to actual funding of the acquisition, 6.6 billion rand, break down how it's going to be funded, because you talk about a cash and share offer.
Sure. So you may recall that we went out on quite a big capital raise in May this year. We raised 2.5 billion rand worth of new equity.
So was this all with the acquisition in the background?
Pretty much. I think we've been asked often, what was the purpose behind the capital raise? Nobody just raises that kind of capital and sits on the cash. The reality is that we were well advanced on this particular transaction way back in May already. Yeah. We needed to hedge ourselves in terms of this particular transaction, so that capital raise was partly to hedge ourselves on funding the acquisition. So we'll use the bulk of that 2.5 billion rand, which currently sits on our balance sheet in cash. The vendors themselves, the actual sellers of the portfolio, will take another 2.5 odd billion rand in new Growthpoint shares, which will be issued, about 93.3 million shares, issued at 27 rand a share. And then the balance will be funded from cash and existing cash and bank lines that we have.
Mm-hmm. At the same time, you've also, Growthpoint Australia is also going through its own rights issue there, and you've obviously said you're going to be taking up those rights there. So tell us about the plans that you've got with that portfolio in light of the capital raising on that end.
Sure. So the Australian entity announced a rights offer, in fact a capital raise about 2 weeks ago, where they went out on a book build and raised about $50 million. And that was followed up by a rights offer for $100 million. So the two, let's say, capital raising exercises together will raise $150 million for the Aussie entity. We do have some pretty interesting growth prospects still in Australia, and I think part of the cash that we are raising, though, will be utilized to bring down our gearing. We're sitting at about 48% loan to value ratio in Australia. We'll bring that down to about 43%, which brings with it a commensurate saving on our interest rate with our banks. And so I think, all up, South African entity owns 66% of the shares in the Australian entity, and we have underwritten or committed to follow our rights, but also underwrite any shortfall if other shareholders don't follow their rights.
Yeah, and just very quickly, just coming back to this acquisition, because you mentioned it's the largest single acquisition to date, so of course it is very significant. What does it mean for shareholders from an earnings perspective? I mean, is it earnings accretive? When are you going to see the benefit of adding their portfolio to your assets?
Sure. So, I mean, we've done a number of fairly significant deals in the last couple of years. I think the most notable one in 2011, the acquisition of a 50% shareholding in the V&A Waterfront, where we partnered with a PIC on behalf of the Government Employees Pension Fund. That was about 4.9 billion, our half share. This at 6.6 billion is definitely the largest. It is going to be accretive to our shareholders. I think the impact on this financial year through to June 14 is probably going to be quite muted, in that effective date of transfer of the properties is only likely to be about 1 February. But for the financial year 2015, the portfolio and its income will be in our numbers for a full 12 months. And definitely, we would expect that to be accretive to our current projected distributions per share.